Hello, my name is Sandra, and welcome to my channel from Lack to Legacy. I am a retired teacher turned financial literacy advocate, and on this channel, we talk all things money, investing, mindset. We sprinkle in a little travel because, as most of you all know, I am living abroad. I am currently in Kuala Lumpur, Malaysia. And I'm so happy to be here. It has been so long since I did a stream. It's like, I think now we average into a month. I am really living my retirement dreams, and that's a fact. So I just want to welcome anybody who is here, who is watching. If you are in the chat, please don't forget like, subscribe, share the channel, all those wonderful things. Hit any of those buttons. Say hello to everybody that's in the chat. Hey, big sister Dula. That's my sister D. Hey, Mira Love. That is our moderator extraordinaire. This thing don't happen if Marilyn's not here. Let's be clear. Marilyn is the glue. Marilyn is the heartbeat of this thing. So y'all make sure y'all treat Marilyn well, and y'all make sure y'all greet her as you're coming into the chat. And we don't ascend, we retire. Wait a minute, we don't retire, we ascend. That's Sabangale. You all need to go over and check out Sabangale's YouTube channel. Sabangale is everywhere, baby. Sabangale has a newsletter, a Substack. She's on Instagram. We don't retire, we ascend. That's her handle across all social media platforms. So Sabangale also has a keto-friendly newsletter. Don't let me misquote Sabangale, but I know it's a keto-friendly because I get it. And Lord knows I need to be on keto. I need to be doing something. We could talk about that too. I got something to share with y'all because recently me and 5 other Black women here in Malaysia went and had our health screenings done together. Talking about sisterhood. Oh my goodness. It was so wonderful to go through that. Anybody who, if you're a woman of a particular age and you're going to have a head, Rudy to the tootie, doctor's appointment, it could be a little unnerving. And so the sisters were all there holding hands together. It was so wonderful. And I want to thank them. I want to thank those ladies who were at the doctor with me, all of us together. It was a beautiful experience. So let me make sure I greeted everybody. I said hi to Sabangale. I said hi to Dee. I said hey to Mira Love. My son is going to be joining us later. There are 11 viewers and 3 people in the chat. If you are viewing, simply stop in the chat and say hello. Just say hey. Don't cost you nothing. Hit the subscribe button. Don't forget to share the channel if you know a Black woman or anybody who might be having a little angst. Hey, CK, who might be having, a little anxiety about the stock market, and who wouldn't? I mean, who wouldn't? Hey, MSB Aromatherapy. It's so good to see y'all in the chat. I promise you. I got my tea this morning. Y'all, we got so much to talk about. I'm going to try to get right to it. I'm going to get to what we came for. But I got to give y'all a little backstory. Always a little backstory. I'm drinking tea with ginger and lemon. No honey, no cream. I'm not even drinking coffee. So anyway, the doctor told me a few of my numbers were out of whack. You don't have to tell me twice. We talked about my blood sugar and my cholesterol. Say less, honey. I've been eating vegetables and salmon and drinking tea ever since that report hit the desk. So I'm off the coffee. We're going to see what's going to happen, y'all. I shouldn't even say it like that. It's not we're going to see. I have made a commitment to cleaning this situation up because I want to stay outside. I don't want to come inside. Hey, Dee. Hey, no, before you go. I'm pretty sure I think that's Alice. I try to get everybody's handles together. But at any rate, if you're joining us for the first time, you are so welcome to be here. I promise. And if you're joining us in the future, I'm going to get right to it because then nobody come here to hear me babble. This is what you came for. Let's see. I'm using a new StreamYard setup. Y'all see that StreamYard logo? I'm not even in my own account. So if it's a little clunky this morning, y'all forgive me. And I'm going to turn this music down just a wee bit because it's a little distracting to me. I like to have it in the background, but let me get this out the way. Okay, so the first slide, as you can see, it says how to invest fearlessly even in a market crash. Y'all, I'm not even claiming a market crash, but if there's anybody in here who follows the stock market, it's some funky stuff going on. The little orange man in the big White House is over there tearing things up. And so, what do you do? What do you do when it looks like things are going south? And so that's what we're here to talk about. Hey, Nicole, welcome, 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 everybody. We've got 20 people watching, and I can't see likes. Y'all know I can't see. So don't forget, hit the like button, hit the subscribe button, and share the channel. And I'm going to hop right to it. Let me get to this next slide. It says, are you scared to invest? I don't know about y'all. Look, I won't say I know what I'm doing. And let me go ahead on and drop this doggone disclaimer. You all do know, I said at the top of the show that I am not a financial advisor. I am a retired teacher turned financial literacy advocate. I am an advocate for literacy. Of course I am. I'm still a teacher at heart. And my whole thing is I think everybody should be an investor. And some of us should go on to be traders if you're willing to put in the time. Hey, Maribel. Hey, Traveling Light. Hey, y'all. If you are inclined to take the time to learn and to study, then you can also add trader to your kit of what I think we're going to need to survive financially. So I think everybody should be an investor. And by that, I mean a long-term investor. So if you are scared, if you're just a little afraid, or even if you've got some misgivings or some anxiety about investing, type yes in the chat. I'm just curious to see where y'all are. Once a teacher, always a teacher. You already know. Yep. It doesn't go away. It doesn't go away. As soon as I learned something, I was like that since, when I was 5 years old. As soon as I learned to read, I'm going to go home and teach my cousins. Hey, y'all, come on. There's a new word I learned in kindergarten. So, yes, good. I see some no's coming in the chat. Uh-huh. Hey, New Life Creator. It's so good to have you guys. Good. I'm glad. Thank goodness. Then I'm talking to my people. Yes, we don't retire. We ascend. Said yes, but I'm doing it anyway. Thank you, thank you, thank you, thank you. I'm here to tell you, Warren Buffett said it, not me. Somebody much wiser than me said it. When others are afraid, that's when we get bold in our investing. When people are afraid and panic selling, that's when the market is on sale. When people start to panic sell, you will see the stock prices start to decline. Because I heard this too. Poor people sell when they're afraid. Rich people buy when the market starts to tank because they realize that the stock market is actually on sale. Did you guys know that 60% of African Americans don't invest due to fear? 60. That number, that's crazy. 60. That means that only 40% of us have the knowledge, because I don't think we don't invest because we don't have money or resources. It is mainly, I think, an information gap. And so I'm here to do my little bitty part to kind of close the information gap. Again, I will say this throughout this stream, and I'm not going to be here long because y'all know this internet is janky. I am not a financial advisor. I am a retiree who has a pension, who wants to maximize that money, not just for my own benefit, but for the benefit of my grandchildren, for building this legacy. So that, hence the title of this channel is From Lack to Legacy. It's from that scarcity mindset. I had to escape. I know if it's not a part of your lexicon or a part of your sphere of your space, it was for me. That fear of, number one, not knowing what to do. And then just, who wants to lose money? Nobody wants to lose money. And I think the more we know, the more confident we are, the more likely we are to act in informed ways. We don't want anybody out here just throwing money at anything. And so I think a part of that 60% of us that aren't investing is simply because we don't know. And many of us are fearful when you don't know something. And so I have always found the more I know, the more confidently I can act. So somebody said, yes, we're socialized to be consumers. Oh, that's true. Capitalism rules in the US. Yep. So we are taught to spend our money. That's the way. So you know what that makes us? That makes us the cog in the wheel. We keep the economy going and rolling because we're spending. We are buying Apple products. So we keep Apple in business. We feed those shareholders. We buy Nike gym shoes. We are consumers. We buy cars. We buy across all sectors. And so why not be more than just a consumer where you're putting money out? Why not also be on the receiving end? When those stock prices go up, we want to take part in that. When those companies pay out a dividend and their, because their stock prices are appreciating, we want to cash in on that. And so I want to just dispel some of the fear around what you might be witnessing in the stock market as prices start to go down. And many of us in this chat were around in 2008. And even if you weren't invested in the stock market, we're all aware of the housing crisis. We were all here for the tech bubble that burst, and all the things went mad in technology. We have been here. We were here for the pandemonium. So we have seen market cycles where the market seemingly tanks, and folks are losing money and people are running afraid. That is not the time. That is not the time. And that is not how I want us to operate. I think any decision that you make in fear is probably not your best decision. Somebody said we need to be owners. Yes, we need to be stock owners. And I know that and I really was compelled to do this because I'm talking to my sisters. I know that some of us are a little apprehensive. Prices are going down. You may even be watching your 401k or your other investments, and you may have taken a bit of a hit over the last couple of months. But I want you to know, and you can look at this for yourself. And if you have access to Yahoo Finance, that's a resource that you can use. Market Watch is another one that I like. I also like Seeking Alpha. Those are 3 online resources where you can go. You do not have to take my word for it. And I'm going to tell you this right here, right now. Please don't take anybody's word on the internet, on YouTube, telling you something about stocks and investing. You want to be educated for yourself. So that's what I am. I am an education, financial literacy advocate. So I'm not going to just tell you something. I'm going to also give you the resource where you you should go and check it out for yourself. So I'm going to run through those 3 resources again. My assertion here is that even with the 2008 crisis, people who continue to invest, even though they saw the market tank, do you know within 10 years, those investors had gained 400% in the stock market? The stock market has recovered from every time it's tanked, every time you've seen that dip. And I know you guys have probably heard the term buy the dip. This is what they mean when they say buy the dip. That is good, sound financial advice because things are on sale. The prices are lower. And we're going to look at some companies before the end of this. And again, I'm going to say this throughout this thing. Y'all not going to have the FCC looking for me. I am not a financial advisor. So here are 3 resources that you can use to check my facts. 1, you can use Investopedia. You can use Yahoo Finance. And I like Seeking Alpha. And I think I'm going to also refer to Morningstar in a later slide. The stock market has recovered every time. So if you are watching the stock market right now, drop a little flame in the chat if you see that now this is an opportunity. If you're looking at it as a fearful time and, oh my God, look at the balance of my 401k, I get it. That's what your rational mind would say. But I need you to step back, take a breath, ladies, take a breath, my people, and realize that the stock market has recovered every time from the pandemic. You see, every time we create a low, the stock market rebounds with a higher high. So, hey, let me say hi to a few folks. Hey, D. Hey, D Walker. Hey, Greta. How are you? Hey, C Temp. That's my sister. Hey, girl. Hey, CK. I think I said hey to CK. Mirabelle. Hey, everybody. I do. So I think I've greeted everybody. If I missed anybody, you already know, charge it to my head and not my heart. Yep. If you're here for the first time, please subscribe. Yep. If you are interested in learning more about how to become a better investor, please consider joining us in our 1000 Black Women Brokerage Account Challenge. You can find that link. I'll post the link in the description of this video. All right. So let me get this out the way. Y'all do know I'm sleepy, right? Okay, let me see. It says hide the comment. Okay, so that you can see. And I'm going to take this out of the way too. Is it blocking the slide? I hope it's not. Okay, so if you can see that now is the time for us to be buying, drop the flames. I'm telling y'all, this is the time for us to buy. It is not the time for us to operate out of fear. So if you haven't gotten started, what's an easy way for you to get started? I'm going to tell you this. Did you guys know? And most of the people who rock with us that are in our learning community, they already know this. You can start small. Did you know if you are here and you are a first-time investor, did you know that you could start with as little as $5? I'm not making this up. I got to sip my tea. Mm-hmm. I am not making that up. My son just entered the chat. That boy calms my nerves. I hope everybody have a son like I have. I just love my boy. Anyway, I see a question. It says, what is the challenge? CK, we have a learning community. Currently, we meet every second and fourth Wednesday of the month from 7 p.m. Central Time to 9 p.m. So we meet 2 hours, 2 times a month for a total of 4 hours. And we talk all things money. We're in there learning together. Again, I am a teacher. I'm a retired teacher. But in my retirement, I have taken on this challenge of educating as many Black people and really anybody who wants this information. But my heart is with Black women because we have given so much. We give so much. It is time for us to be on the receiving end. And so we meet every 2 weeks. We have a book club portion. Right now, we're reading the book Get Good with Money by Tiffany Alici. We are engaging in our low spin, no spin challenge. We recently had Sabangale, who is one of our community members, come and share a book that she authored. Yes, honey, we got authors in the community. She did a book now about that budget, and she was so gracious. She went over that book with us. So this is our fourth book that we've gone over or that we're working through as a community. So we take financial literacy books and we do that work together. Because really, come on, who got time to read a whole book, y'all? I mean, y'all might have time. I have the time, but I'm not. It's so dry when I'm reading a financial literacy book alone. It is so much better when I'm doing it in community with women because we can share our ideas. And so that's what we do. We talk about our investments, what's working, what's not working. We are learning and we roll up our sleeves and we get in there together. Marilyn dropped the link in the chat. And so the price, I have discounted the price 25%, and that is for the entire year. And I'm not going to even put this out here, but I'm going to put it out there. Once you become a part of our community, you're a part of our community. There is no monthly fee for this. I'm not trying to nickel and dime anybody, but it does cost for me to run this whole show. So the fee, I think, is pretty reasonable for a year's worth of community learning and just us rooting for each other and cheering each other. So let's get into it. I'm trying to tell y'all something. You can start small. If you have nothing invested, it is not too late. It is never too late. It's only too late if you don't start. It's only too late if they put dirt on you and they put you in the ground and you didn't start. That's now it's too late. But if you still breathing, and I mean that, I know I'm not even being facetious. If you are still breathing, it is not too late. I hate that language of too late. It it doesn't exist. There are things that we can do to get caught up, and one of those is to get started. And you can start small. You can start buying fractional shares of stocks on Charles Schwab's website. You can buy fractional shares of stocks and ETFs with Fidelity. You can open up a Vanguard account. There are multiple Webull, Moo. There are multiple platforms out there, and they cost nothing. You can open up many of those accounts with $0. Hey Maya, hey Maya. $0. Did you hear that? $0 to open up your brokerage account, and you can start investing with as little as $5. And if you don't know how to do that, then child, you need to be in the 1,000 Women Black Brokerage Account Challenge. You need to be over here in the learning community with us, because we will actually walk you through how to execute that first, how to invest your first $5. So let's say you're ready. You already got your Charles Schwab account open. You've already got your Fidelity account open, and you've already invested, say, your first $10. Go, girl, go. We want to encourage you to do more. So one of the strategies that I like, now there are tons of ways that you can invest, but I like to dollar cost average. And what is dollar cost averaging? Dollar cost averaging simply says, I am going to take that $5, and every Wednesday, no matter what the price of Apple is, if it's $200 a share, if it's $220 a share, every Wednesday, I am going to put $5 into this investment. It could be a single stock, it could be an ETF. Y'all know I'm an ETF and an index fund girl, and we'll get to that. We'll get to the what's and the whys. But if you want to start with a single stock, I would encourage you to start with a blue chip stock. I would encourage you to start with an aristocrat stock, a king stock. I personally am risk averse. I personally don't do like biotech, startups, penny stocks. I ain't got time for that. First of all, y'all know I'm on the other side of the clock. I'm on the other side of the field. This my back half. And so I don't have time. But if you are a younger investor and you have the tolerance for more risk, then you might want to look into some of those other equities. I personally like king stocks. A king stock is a stock who has increased its dividend over the last 50 years. An aristocrat stock is a stock that has increased its dividend payout over the last 25 years. And then, you got your old tried and trues. So I like those. Coca-Cola. I want a company that I know ain't going nowhere personally. I do not have time for you to close up the doors with my money. I don't have time. So I don't play like that. So if I were you, and if I were just getting started today, I would definitely start small, and I would start dollar cost averaging in, meaning I would get that on a schedule. And no matter what, I'm talking to long-term investors, I would do that over time. We call that set it and forget it. If you look at it every day, it's going to drive you bananas. Don't look at it every day, because the stock market does this. It goes up, it comes down. It goes up, it comes down. It will drive you mad. You have to have a long view for this. So I'm talking to investors who are looking at leaving that money in the market for at least 3 to 5 years, minimally 5 years. I personally would like to see you leave it in there as long as possible, because the longer your money is in the market, the more likely you are to see some appreciation in the stock of, the price of that stock, which means as that stock price goes up, you reap the benefits of that. So not only would you be dollar cost averaging in, meaning you have this investment on a set schedule, you don't mess with it. I'm going to also say you want to reinvest Any dividends that are paid out, that's called a drip. Yes, I'm giving y'all all this good knowledge for free for the low low. It's called a drip, a dividend reinvestment program. And you can set that up at the time you set up your, we call this automate. When you automate your investment, meaning that I'm going to tell Schwab, look, just take the $5 out of my account every week. Don't ask me, because if you ask me, I might, I might be trying to get some Starbucks that week. I might not want to sacrifice the $5. You want to take it, you want to make it as easy on yourself as possible. So you're going to automate this. You're going to tell Schwab, Fidelity, Vanguard, Weibo, Moomoo, whoever it is that you're investing with, you're going to tell them, take this money out once a month, if that's your thing. If you want to do it once every week, that's a thing. If y'all follow my sister Lisa J Stocks, she had a challenge. I think she was investing $1 a day, $10 a day, but she did it at the same time every day, and you just keep at it. You have to stick with it. So that's dollar cost averaging. And the benefit of that, why would anybody dollar cost average in, is because eventually you're going to catch that stock at a low price. So you'll be buying some shares at its lowest price, while some of them you'll be buying at a higher price, but over time it will average out and you'll do better. Now, there is an article, I want to say, I can't remember who produced this article, but if you're in our community, you have access to this, that talks about the benefit of lump sum investing. And there are some in the financial community that believe lump sum investing is it's a viable way to invest as well, where you take a lump sum of money and you put it in, you try to get it, or buy the dip. You try to buy at the lowest price and then just, dump all the money at that lowest price. I call that time in the market. I've never been good at time in the market. I don't know when the bottom is going to be the bottom. And so I prefer dollar cost averaging, into a stock, but you can lump sum in if you're buying the dip, because we always want to buy low. You want to buy low. I don't care if it's a stock or ETF. You want to buy it at its lowest price, of course. Who wants to overpay for anything? I don't want to overpay for a cup of sugar. I don't want to overpay for anything. So the same is true for stocks. So that was a lot of information. Let me stop and take a breath. How y'all doing in the chat? Hey, y'all. If y'all doing okay, give me a thumbs up just so I kind of know how everybody is doing. Marilyn says we have 42 people watching and 24 likes. Hit the like button, y'all. Hit the subscribe button. Share the channel. If you know a sister who's sitting at home and she is afraid to get into the stock market or hasn't gotten in the stock market, y'all, come on, invite her over here to this stream. I'm going to give you some very practical steps on how to get into the market, how to get in safely, and it doesn't have to cost you a fortune. And if you still need some additional support, we are extending an invitation to you to join us in community every second and fourth Wednesday of the month. Marilyn put the link in the chat. I'll put it in the description box. It's all over my YouTube page. You can go to the community tab or where they have posts, and you'll see the link if you want to do this in community. Yes, Laura, who said it? That should be our rallying cry. Buy low, sell high. And we buy when others are afraid, y'all. When that panic selling is going on and you see red in the market, real investors, long-term investors, knowledgeable investors, we get giddy. It's like, oh, Lord, let them sell. Because I'm not selling. I'm holding. I am a long-term investor, so I'm a buy and hold. I started small. I took my own advice. I dollar cost average in, and I reinvest all of my dividends through a drip. You can set all of that up so that it is automated and you don't have to think about it anymore. Because I'm telling y'all, if you get in there and rely on your memory, like, I don't know about you, but my memory ain't really. Sometimes I forget to take my doggone contacts out. You think I'm going to be over here every Wednesday remembering to tell Fidelity? No. I'm going to hit this. So we're going to start small. We're going to dollar cost average in. We're going to set up our drip and we're going to automate this thing. And so what are some things that you can invest in that I would consider? And this is not financial advice, because y'all know I'm not a financial advisor. I can only tell you what I'm doing. I can only tell you what the girls in the community are doing. You might want to consider an index fund or an ETF. And an ETF is an exchange traded fund. And what is an ETF? An ETF is a basket. You can think of it as a basket of funds. Of course, you could go out and buy Apple. You could go out. Let me just tell you a few. Now, do your own research. I'm going to give you a few stocks that are currently undervalued. By that, I mean that they are the actual value of the stock itself, share price, is actually more than what it's currently selling for. And here, y'all don't have to take my word for it. You can Google this yourself. You can go to Yahoo Finance yourself. You can go to Morningstar. You can go to Market, any of those. Google is currently undervalued. Check it out. Don't take my word. Microsoft is currently undervalued. United Healthcare currently undervalued. Check it out for yourself. Check it out and see. By undervalued, those are the companies that are actually on sale, meaning that they are actually valued at more than what their current share price is. And so if you're interested in Google, you might want to look at it now. You don't want to buy high, you want to buy low. If you believe in the company, Microsoft, you might want to go check it out. Don't take my word for it. Use those 3 resources I gave you and go check it out. And I'll show you. I'll pull them up. I'll show you where I got that information from, just in case you want to check behind me. There are several, and I'll let you know at the end of the stream. I actually found 5. I'm talking about tried and true, proven companies. They may even be, I think I put in, show me the current aristocrat stocks, king stocks that are undervalued. So we'll check it out because we only want to invest in the best stocks, the best ETFs. And so if you want to do a single stock, that's your prerogative, go for it. But I would suggest that you pick something that it's got some staying power, it's got some history, it's tried and true. If you're interested in an ETF, an exchange traded fund, why pick one stock when you could get an exchange traded fund that has a basket of stocks? You could get a total market fund that has over 4,000 stocks in it across all asset class, across all sectors. So you would be getting financials, you would be getting stocks that are tech stocks, consumer discretionary, utilities. There are 11, girl, I'm teaching today. There are 11 sectors in the US stock market. And if you purchase a total stock market ETF like a VTI, and I am not suggesting that that's the one that you buy. I'm just telling you VTI is a Vanguard total market ETF, and it has over 4,000 stocks. So at one time, you can have a share, a little piece of each one of those companies. And an ETF is good for new investors because it allows you to mitigate some of the risk. You spread out, you are diversifying your portfolio in one fell swoop. So why buy an ETF over a single stock? Well, if you put all your eggs in one basket, let's say you dump all the money grandma left you into Apple and Apple tanks in the morning, you are going to feel that. If you take the same money that grandma left you and you put it into an ETF across, say, a total market or an S&P 500 ETF, an S&P 500 ETF is going to have in its basket over 500 stocks, some of the best stocks that are traded on the stock exchange. So you could get a total market, that's a broad market. Both of them are considered broad market. You could get an S&P 500 ETF. And instead of putting all of your eggs in one company, you have now diversified your portfolio all in one stock. I'm just saying. So I like ETFs because you don't have to risk, as you know, you're going to be putting whatever money aside that you're putting aside, but you don't have to put it all in one place and withstand that kind of risk. You can spread out the risk and it just makes it easier. And so one that I like, what's an S&P 500? SPY is probably the oldest and the most known. SPY is the ticker symbol. It's the most widely known S&P 500 ETF. However, it has a higher expense ratio. There are better S&P 500 ETFs that you could invest in. For example, VOO, VOO. That's a Vanguard S&P 500 ETF, meaning it has over 500 companies. If you buy a share, or if you buy a share of VOO, you're actually getting a little slice of over 500 companies. You have now diversified your portfolio without even thinking about it. So if you're a new investor, consider an index fund or an ETF. Just saying. And the other thing that you need to do as a new investor or any investor, you need to get educated. I hope nothing is blocking this thing. Get educated. Join us, the 1000 Black Women Brokerage Account Challenge. That's just one way, but there are multiple ways. You guys, we're currently reading Tiffany Alichi's book, Get Good with Money, but the book, The Intelligent Investor, that book has been around forever. It is like the beginning investor's Bible. Yes. So read. You can read books. YouTube University has done so much for us as a community, I'm telling you. So I would say start small, dollar cost average in, find you a good broad market ETF or index fund, and get educated and stay educated, because things change. Don't y'all remember just 20 short years ago? We weren't talking about no ETFs, y'all. We were talking about mutual funds. Mutual funds still exist, but we have found, I think, a better vehicle, because mutual funds tend to carry higher cost. It's going to cost you a little bit more if you are in an actively managed mutual fund, as opposed to being in a passively managed ETF or index fund. And if you don't know what any of those things are, girl, y'all know where to come. We talk about this every other Wednesday of the month. Big Sister Dula said diversification. Yes, it's calming my nerves in the market. And somebody told me just recently, everything in their portfolio was red. The only thing that was green was SCHD. And if you don't know what SCHD, that's a Schwab dividend fund. And SCHD is what the girls in the community call Steady Eddie. Steady Eddie might not be racing up the charts in terms of price appreciation, but that dividend is going to be steady. It is a wonderful ETF to consider if you are interested in dividend income. So SCHD. So I've given you 3 right there, y'all. We're giving away all the goods. Let's hit this next slide. Oh, so I told you these. What stocks are on sale right now? Y'all might want to check out Google. If you're interested in Google, don't take my word for it. Please don't. Please do not. Google is currently undervalued. And what you want to look at, if you're looking to see if a company's overvalued or undervalued, you want to look at their PE ratio. If that PE ratio is under 25, under 20, the lower the PE ratio, the better. And the PE ratio is simply their price to earnings ratio. And I'll go over all of that. I got some tabs open in case y'all want to know what a PE ratio is. But look, my time is running out. I got like a good 20 more minutes on this joint. So I'm going to try to get through as much as I can and take any questions that you all have. But how do you determine if a stock is on price? If a stock is on sale? Well, you can look and see if the price is coming down. That's a simple, go to Yahoo Finance, go to, y'all know I like Seeking Alpha. I really do. I just like that whole website. They have a free version. Don't do any of the paid versions. I think all of these sites probably have a paid component. No need. There's so much free information out here. You don't need to pay for information about stocks, ETFs, any of that. And you can get educated. I'll tell you what the PE ratio is, but I'll go right to y'all. No, I would go to Investopedia, put in PE ratio. You could do that right now. You will leave this stream so much smarter. You're getting smarter just by sitting here, y'all. Go to Investopedia and put in what is PE ratio. They will give you the most beautiful explanation, way better than I could, but it's price to earnings. And if that ratio is less than 25, under 20, you could potentially be looking at a company that's undervalued. But you also want to look at its historical price. Is the price coming down, over time? And you want to compare it to its competitors. So if you're talking about Google, that's a tech company more or less. You want to be looking at other tech companies. You don't want to compare Google to Ford. Ford's PE ratio in stocks that are in car stocks, they're going to have similar PE ratios. So you don't want to be comparing apples to oranges. If you're talking about Google, Microsoft, Amazon, they will have similar PE ratios, and you want to compare those. So if Google, no, let's say Amazon, Nvidia, the big seven, if their PE ratios, because Nvidia's PE ratio is off the charts, if they're sitting up at 40 and Google is down here at 25, you are comparing apples to oranges. You can see that compared to its peers, its PE ratio is lower. So those are some things that you want to look at. And I think I put it up there on the thing. Go to Yahoo Finance right now and Google it for yourself. You can use ChatGPT, might not be the most reliable, but you can start there. Start with ChatGPT, start with Claude. I challenge you, just type in, is Microsoft currently undervalued? Is it a good buy? I challenge you, somebody do it. And once you do it, just put a thumbs up down in the chat once you find out for yourself. Is United Healthcare currently undervalued? And if it's not, let me know, because I just Googled it last night and they said all three of these. And there were several others that are currently undervalued, good companies that are undervalued, that if you're interested in them, if you believe in these companies, you might want to, this might be a good time to buy. Don't take my word. I am not a financial advisor. I am a retired teacher turned financial literacy advocate. That's all I do. I just want to start the conversation with y'all. All right, let's get it on. Making your money work in the downturn. We talked about considering ETFs, individual stocks, but I want you to consider dividend ETFs. For those of us who are nearing retirement, and to be honest with you, I think I'm going to try to reach a whole nother demographic. I think older Black women, we get it. I feel like I'm preaching to the choir. We need to be now turning to 20-somethings and 30-somethings and getting them in the game now, y'all, so they don't feel like I know I did anyway. I was tardy to the party. And so I felt like I'm doing this kind of catch-up thing. We don't want our kids there. So everything that you learned here, please, please, please share with a young person. If they start now, if you start in your 20s, you've got 30 years to let this money sit. You've got 30 years to build up a dividend portfolio. You've got 30 years to build up an index fund or an ETF portfolio. And in our class, we talk about a 3 ETF portfolio, and I won't be giving you that one for free. But if you want to join us, you know where to find us. Marilyn dropped the link in the chat. But we are looking at this 3 ETF portfolio and how can you diversify. There's an overlap tool that you can use to make sure that you are as diversified as possible with as little overlap as possible. I've even seen a 5 ETF portfolio. I personally think you can get it done with a 3 ETF portfolio. And if you really want to just bare bones knuckle down and only do a 1 ETF portfolio, there's a way to do that too. You might just get you a broad market, total market ETF, and set it and forget it. If you just want to really simplify your life. But I would also say toss in some dividend ETFs. And we mentioned one earlier, SCHD, which is Schwab's high yield dividend ETF, and it's Steady Eddie. I'm trying to think of another one. Okay, I'm giving away all my secrets. I personally like VYM, which is Vanguard's high yield dividend ETF as well. SCHD, they both have low expense ratios. So these are the things that we've researched in our learning community. We have an entire spreadsheet where we've looked at 13 to 15 different ETFs. We looked at total market, S&P 500, dividend ETFs, REITs, bond ETFs, And we've looked at their expense ratios, their assets under management, the whole shebangity boodle. And we've come up, I mean, this is research we did, but you don't have to. You could just Google it. What are the top 5 ETFs to invest in, or top 5 dividend ETFs to invest in? If you want to do it by yourself, got it. Did I hear you call my bae's name? This is my sister Yvette. That's her boyfriend. SCHD is that's Yvette's boyfriend. And I'm gonna tell you this. I was doing some research, Yvette. You are absolutely right. I have to concede, and I have to give you all good information. The truth is, Yvette likes SCHD. I like VYM. I like VYM because VYM pays better. It's got an average return that's higher than SCHD's in the short term. But according to my research, and you research it yourself, over time, because of its dividend, SCHD will pay better than VYM. You were right, sister. But if you only got 5 to 10 years and you don't have all day long for SCHD, to put the garage together, if you're in a hurry like me, then VYM for the short term. If you're looking 3 to 5 years, in the short term, VYM might outperform SCHD, but in the long run, SCHD statistically may pay better, may do you better. And I'm telling y'all, I keep saying this over and over again, do not take my word for it. Do not be on the internet taking anybody's word for it. If somebody calls you in the morning talking about, girl, I got a stock tip for you, don't go. Don't do that. Don't do that. You better get yourself on the internet and start learning how to research for yourself. Seriously, as a teacher, I liked my career as a teacher because we don't feed kids. You know what they say? If you feed them once, you feed them a fish. You fed them once, but if you teach them the fish, you've given them a life skill. I am of that ilk. I tend to believe, don't take my word for it. Please, I want to show you how to look these things up yourself. And I would go to Seeking Alpha if I could only pick one website, Seeking Alpha would be mine. So yes, this is a big push for considering a dividend ETF as a part of your portfolio. You can earn passive income. You put enough money in it, leave it there long enough, you can actually live off of your dividend income. And we always talk about reinvesting for bigger outcomes. And that's a part of your dividend reinvestment program. I would do that with any stock. I'll take any dividends. Anytime my dividends are usually paid out quarterly, every 3 months or so. There are some companies that may do a monthly dividend. I don't know, but most of the ones that I invest in do a quarterly dividend. Don't touch that money. I mean, you can if you big willie, you got it like that. I reinvest my dividends. And then what you start to see is this kind of compounding. So remember, you have dollar cost averaged in. Your money is going in every Wednesday or once a month. And then quarterly, whatever your dividend is, you're reinvesting that dividend. So you're buying even more stock. I'm telling y'all, this ain't no game. And I want you to be educated. I want you to be making the best decisions possible. And how do you do that? You get educated. Get with a group. It doesn't have to be us. I would love for you to join us. I really would. I love that the community is stable. We're there. I see the same sisters. I love to hear them report back. Anybody made some money this year? You don't have to tell us how much. If you made some money this year, drop a money bag in the chat. I know I made some money this year. I don't know about y'all. I made some money. I'm up. Even though things are down, I made some money. Yvette says, I got out of the market this week. I took it all out. Many would not do that, but it was best for me. And sister, you have to do what's best for you. Hold tight. Let's stop the presses because there is no one size fits all. There's no cookie cutter to this. And if you took that money out at a profit, sister, bravo, bravissimo. If you took it out and you put it to good use because you needed it and it improved your life, bravissimo. We are not mad at you. I too was a teacher until recently for 25 years. Oh, I have a soft spot in my heart for teachers. We deserve all the best that life has to offer. I'm hoping you retired. I'm hoping you left that profession for something that is more humane. But sister, we get it. And you all know I recently sold all my Target stock. I sure did. And I got out of that joint just in time because it took a nasty. I took a little bit of a loss on that, but I sold. I was gonna sell it anyway. I think I sold before we did all of the blackout stuff. Yeah. I'm telling y'all, we got folks in the chat who we are making money, but this is not a get rich quick. We're talking long term investing. Hold on, y'all. I'm still got a little bit of this lingering cold. Mm-hmm. CK says steady through the ups and the downs, but holding and investing, and it's finding that urge. And I understand Yvette says she had to take it out. That's a whole nother thing. If you got a medical emergency, if you are relocating to another country, whatever the reason is, the fact that you have that kitty there to go to turn to, you don't have to take out a loan. That's what this is for. The money, we can't take it with us. That money is for us to live better, to achieve your financial goals. For me, one of them is to live better. And a second part of my financial goal is to leave something to my grandchildren. You know, even if it's just the legacy of education, of saying, well, my grandmama was out there beating the drum, teaching not only other people, but I teach my grandchildren. We have a monthly meeting. We have to stay consistent with our monthly meeting. And I talk to them about how to invest in the stock market. So that's a part of it. But that money is for us to live and make others' lives better around us. That. Oh, hey, Golden Woman, welcome to the chat. Okay, Yvette says, yes, it was at a profit. God bless you. And I get a teacher's pension and taking a class, and that's it, girl. We could talk all day long about how good a wonderful pension is. Do not get me started. Sister, you are sitting in the best possible spot to have a pension. And you know, I understand that that's not every that's a dying thing. That's a whole dying concept. But to have a pension where you know they have to pay you into perpetuity, child, they have to pay you till you take your last breath. And then you're in the stock market investing. Y'all, I'm telling y'all, we are getting it. We are getting it. We're on to something. Okay. So if you want to get more investing tips, don't forget, like, subscribe, share the channel, y'all. Oh, and then the history of the stock market. We're not going to go into that one. But let me just run through these tabs real quick because I want to show you where I got this information. So I need to go back over here. I want to share one of these screens with you all. So let me take this off and I'm going to share where I found the research on those undervalued companies. Hold on one second. It is extra camera. I'm going to share screen. Can you all see this? Because I can't see you now. Okay, let me add this. Before presenting a screen, remove. Okay, I'm going to remove this one and I'm going to add this one. Okay. So you can see Google stock. And so this is my favorite website, Seeking Alpha. And it says Google stock, why now could be the best time to buy before it soars. So I'm not saying you go buy you some Google. I'm just saying if you're interested in Google, and y'all think about it, Google owns YouTube. Google is one of the largest search engines. So we're talking about a pretty stable company. It's in the Magnificent Seven or whatever you want to call it. I don't know what it's going by now. So go check it out. Read the article for yourself. One of the others that I looked at, let me see if I can share this one with you. Y'all know my tech brain is slow. I'm going to share, hold on. Stop sharing. I'm going to share this other one. Share. And tell me if y'all could see this. So I looked up Microsoft. Is it still the Mag 7? I don't know if they still call it the Mag 7, but I do. You know, old timers do. Girl, every week they come up with a new acronym for Nvidia, Microsoft, Amazon. You all know the ones that are in there. Google, Microsoft, Meta, and I don't know, you know them. Anyway, it says after earnings, is Microsoft a buy or sell or fairly valued? I found this article on Morningstar. And again, all of these websites probably have some kind of paid component. Please don't pay. Please don't pay. I go to the free website. I'm all about free, 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 free. So I found this research on Morningstar, but you can also like Google or drop in any of these companies' names into Investopedia, Yahoo Finance, and simply ask, is this company currently undervalued? And you want to look at their PE ratio. Is their PE ratio under 25, under 20? And then I've got another resource that I use. So let me take that one away. Hold on. And oh, here it is. So can you all see this one? I went to Yahoo Finance. It says, is United Healthcare Group, and their ticker is UNH, the most undervalued high quality stock to buy, according to analysts. And so that might be something. Yeah, I know it's in the Mag 7, but I can't name all 7 of them. Somebody drop all 7 of them in the chat. So you might want to look at, if you believe in United Healthcare. Now, first of all, y'all know the population in the U.S. is aging. Y'all know medical care costs are through the roof. That don't look like that's going to change anytime soon, because the little orange man in the little White House, in the big White House, he's a businessman. Don't never forget that. So if you are interested or you believe in this company, you want to do some research, I'm just saying, take a look at United Healthcare. I believe it's undervalued. Check it out. And then finally, this is what when I say you can research these things for yourself, let me show you. This is exactly how I started. I'm going to share this final resource just so you can see how easy it is to get educated for yourself. So let me share this with you. And this is Investopedia. So all I did was I went to Investopedia and I said price to earnings ratio, the PE ratio, the definition, the formula, the examples. I want to know everything there is to know about a doggone PE ratio. And look at it. It's all right there. They give you the definition. And this is in simple layman's terms. You do not have to be some financial wizard to understand what they're talking about. And so then they summarize it for you. You've got graphics, examples, the whole shebangity boodle, folks. That's all I'm saying. There's no reason for us not to know. Thank you, Beverly. So it's Alphabet, which is Google, Amazon, Apple, Meta, Microsoft, and Tesla. Ooh, I know why I left that one out. I don't even speak Tesla. Hey, Winsome, big up yourself. Hey, that's my sister. She just joined the chat. She just joined the chat. Hey, Winsome. You all please go over and check out Winsome's channel. Big up yourself. I'm telling y'all, the sisters over there doing healing work. I'm talking about soul healing work. So that's it, y'all. Listen, we're going to recap real quick. Sister, I'm so glad you got in here. Oh my gosh. Oh, I'm going to just recap really quickly. If you're a new investor, even if you are a seasoned investor, I know it can be scary when you look at your portfolio and you see all of this red, and our inclination is to run, hide, protect our assets, protect your capital. But I promise you, even though it's counterintuitive, the rich invest when the market is down, because what they realize over time, every time, and y'all don't have to believe me. If I had time, I would pull you up a chart. Every time, if you don't believe me, I want you to do this. This is your homework. I want you to find a chart of the S&P 500. You can go look at SPY. You can even look at VTI and just look as far back as you can. You're going to see this. You're going to see a up, and then you're going to see a down. And in that downtime, you're going to see a lot of people were probably panic selling because some of us just don't have the stomach to ride it out. But after that, if you continue to look, you're going to see the recovery. And that high is going to be higher than that previous high. And so you get a picture that looks like this. I know this is crazy. I wish I had drawn it out. It looks like this. And then you get this dip. And when you hear people say buy the dip, that's what they're talking about. When stocks go down, buy the dip. And then you're going to see the recovery. And the high is going to be higher than that previous high. And then you're going to see another dip. And you're like, oh, Lord, here we go again. Yes, this is the nature of the stock market. And then there's another buying opportunity to buy that dip. Buy when it's low. And then you're going to see the recovery. And you'll see this pattern over and over again. And the next high is going to be higher than those two previous highs. So if you can stand it, if you can withstand that ride, but this is for long-term investors. And we're talking about investing in good companies, sound ETFs, index funds over time. So we're going to start small. You can start with as little as $5. You can open up an online account with Schwab, Fidelity, Moo, Webull, and most of them, it costs nothing to open up your brokerage account. I personally prefer, I don't get a margin account, but that's a whole nother story. You're going to start small. You can buy fractional shares of ETFs or stocks. You're going to dollar cost average into those. You're going to select once a month, once weekly, once a day, and you're going to invest the same amount every time. You're going to automate that. You don't want to have to do that and go in and do it yourself. You want to tell Schwab, you want to give them the directive. Do this for me every Wednesday. Do this for me on the first of the month. Do this for me bi-weekly, whatever it is. You're going to also have them reinvest all of your dividends. That's your DRIP, your dividend reinvestment program. You're going to automate that too. You don't want to have to, reinvest your dividends on your own. So automate that. We talked about dollar cost averaging. We talked about reinvesting your dividends. We talked about sound companies and how do we determine if an ETF is a sound buy. You're going to be looking at the expense ratio. You want a low expense ratio. If you're looking at an individual stock, we want to buy stocks that are well priced. We don't want to pay more. Nobody wants to pay at the top. Do not be buying at all-time highs, y'all. I think that makes sense. If a company is selling at an all-time high, just wait it out. Wait for the pullback. Wait for the dip. And one way to determine and this is one way, this is not the total, but one way to determine if a company is undervalued is to look at its PE ratio. If it's under 25, under 20, you can do that on any of those websites that we talked about. And be patient. Do not take financial advice from somebody on the internet. Research, get educated. Join our community, join another financial literacy community. I promise you, I do not care as long as you're with somebody and as long as you're reading. Get you a good book, The Intelligent Investor. We're currently reading Get Good with Money with Tiffany Alici. You need to have a healthy, whole, I think, kind of outlook on your finances. We cannot just be consumers, folks. We gotta turn this thing around. The statistic that we started out with at the top of this stream is that 60% of Black people are not investing in the stock market, and many because of fear. And we don't have to live like that anymore. I have to put this on a loop and listen to it over and over again. New Life Creator, please. And if you aren't a member of our community, please consider joining. And if there's something prohibiting you from joining, hit me up, send me an email, and we'll see if there's something that we can do to get you in community so that you aren't doing it alone. Because when I tell you, having my sisters side by side, it's that accountability. It's not only splitting up the workload, having somebody help you split up the workload. It's also being accountable. Because I know when I come back next month, I cannot be saying, girl, I'm still thinking about it. Either you're going to pull the trigger, either you're going to do it or you're going to get off the pot, one of the two. And having people who are like-minded and we all have a common goal, I swear to you, there's some synergy there. There's so many positive things that come out of being in community with one another. And y'all, we have just reached our 1 hour mark. I'm going to drop this up here for you. That's the link. You can go to my Calendly page, hit that link. When I tell you it's for an entire year, and anybody who knows us, who's ever joined our community, you already know. Once you're in there, child, you in there. And this is our 3rd year. We have grown over the 3 years, and I thank you all. First of all, let me thank everybody in this chat. If you joined us and you stayed for this live stream, thank you, thank you, thank you. It is not lost on me. I want to be the best I can be and give you the best information. If you have some questions, feel free. For those people that are in our learning community, this coming Wednesday, Allison, the asset maven, she was in the chat earlier. She's going to be speaking to our community about Roth IRAs, traditional IRAs, and what do you do with your money? Like if you've made a profit in the stock market, where do you put that money? What are the tax implications? And y'all know I don't do no talking about taxes because I don't know nothing about birthing no babies. I don't know nothing about taxes. And so when I don't know something, I try to bring somebody in who knows. So if you have questions for me, if you're a part of our learning community, please send your questions to me so that I can get them to Allison so that she'll have time to prepare for us on Wednesday. And I think Allison's going to be speaking to us 2 Wednesdays. Is it the 1st and 2nd Wednesday in March, if I'm not mistaken? Her first one is going to be about Roth investment tax implications and all of that stuff. And she's going to join us for a 2nd session. And you get all of that, plus the camaraderie of wonderful Black women. I'm telling you, I've made some lifelong connections in this learning community, and you want to be a part of that. So let me see. I'm just going to hit some comments. It says, you deserve to be rich. Yes. Oh, that's a good one too. You deserve to be rich. Girl, this is our 3rd or 4th book. We did We Should All Be Millionaires. We did Sabongale's book, Now About That Budget. We did Tiffany Alice's book, Get Good with Money. And we did Your Money or Your Life. So we're on our 4th book. So if you have a great book recommendation, please drop it in the chat. Anybody else got another good book recommendation? Allison is No Before You Go. She is going to be joining us. Yep, I can't wait to talk to Allison. Allison and I have been in each other's lives, just kind of bumping into each other, either through travel or just in the finance space. And when I tell you, just a sweet, kind, loving sister, so willing to share. And you know she's passionate about this because we're doing this for free in essence. The speakers that come to speak to us, they come to speak to us because they're passionate about finance. They're passionate about Black women. Somebody said they're reading You Deserve to Be Rich. So let me shout out all of our YouTubers that are in the chat. Big Sis Dula is actually D from H&D Abroad. If you all have not gone over and subscribed to her channel, please, you all get over to she's got 2 channels too. I want to say Big Sis Dula is her other channel. So get over there and subscribe. Sabongale is We Don't Retire, We Ascend. She has a YouTube channel, Instagram. Sabongale is on all the social media platforms. Subscribe to her Substack. Get over there and support a sister. Let me see who else is in it. I don't know if MSB Aromatherapy is a channel, but it sure sounds like it. If it's not, it should be. And if you are, let me know. And I keep saying New Life Creator. A lot of these people, they have wonderful screen names and they need to be YouTubers. Y'all, my son is in the chat. Oh, listen to this. I need to shout out my own baby. He's at IT Money. He is a gamer. Y'all, let me put this in the chat. AYETMONEY. That's his YouTube channel. Y'all go help my baby get to 100 subscribers so that he can get monetized. I think I just put it in there. I thought I put it in. I don't see it. At any rate, we had Big Up Yourself. Yay. That's my sister Winsome. You all please go over. Thank you, Winsome, for putting that comment in. And it's on the screen. Go over and subscribe to Winsome's channel. Um, Jewel on Demand. If that's not a YouTube channel, it sure sounds like it should be. And here's my son. This is IT Money. He is a gamer actually, and he encourages everybody to get into gaming, and it's just good time. To Kende, hey, Dr. Linda. Y'all, I know some awesome Black women. Y'all get over to Takende Travels. Please get over there, subscribe to her channel. Her and her husband, they do great content together about their move abroad and other things. She also helps Black women establish their online businesses so that they can get out into the world and you don't have to be dependent on a 9 to 5. We've got Yvette Boom Creates in the house. And Yvette is the ultimate plant whisperer, you all. Yvette, and this is no pun intended, has the most evergreen content. If you are a plant lover, if you are a plant mommy, you need to get over there. I'm telling you, my sister helped me. She was like, girl, move that plant. Move that plant over to that one don't like sunlight. This one needs water once a week. She is all of that. So get over there, support her. And I'm not sure who else is in here. Did I miss anybody? I think I got everybody. Okay. Yes, please go sub. Y'all hit my boy up too. I'm telling y'all, because we're trying to get him to 100 subscribers so we can all be monetized. You cannot have too much money. You can never be, you can't have too much, especially if you're doing the right thing with it. So I want to thank you guys for sitting and with me for the entire time. Thank you. We've got 50 viewers on the stream. Please don't forget on your way out, like the channel. Hit the like button. Y'all don't cost nothing. It's totally free. You can support a sister's channel. Subscribe to the channel if you haven't already subscribed and share this video. Please, my wish, share with a young person. Share it with somebody in their 20s. Share it with somebody in their 30s. I swear to you, if they start now investing $5, $10 a week, that's $40 a month, y'all. That's almost $500 a year. Set it, forget it. Put it in a good ETF, a strong company that you believe in. SCHD. Wait a minute. I want to make sure I got everybody. And CTIM. I'm not sure if CTIM wants but C-Temp is our trader extraordinaire in our chat. That's our sister who's been trading for over a decade. She has a Discord that meets, I want to say it's the second and third Friday of the month. Don't let me misquote it. But if you're interested in becoming an options trader and you just want to be in the company of wonderful women who are talking money, check it out. All right, y'all, let me get out. I'm so surprised this internet held up this whole time. What? All right, y'all. I'm out of here. I love y'all. I wish y'all nothing but wealth, prosperity, good health, all of that good stuff. And I will see you soon again. Bye, y'all.